So I thought this would be a pretty cool article to kind of like check out. The shocking tax deductions of the rich. G-Wagons, guard dogs, wine dinners. So let's get right into this, right? So costing more than $160,000, G-Wagons are hardly what most people would think of as a bargain. But for the wealthy, these luxury SUVs are rolling tax loopholes. The so-called Hummer deduction section 179 allows a car that weighs at least 6,000 pounds to count as a tax benefit in some circumstances. Snap it up via your company, use it for business at least half the time, and that Mercedes G-Class or Cadillac Escalade starting at $76,000 or Infiniti QX80 from $70,000 could earn a $25,000 deduction the first year of ownership. So the IRS treats such rights as depreciating assets, allowing for the offset though the benefit wasn't originally intended to help out high rollers. According to Scott Hall of Swappolice.com, it was actually meant for farm equipment like tractors. As our cars have gotten heavier, the tax code has failed to keep up. It's a provision to incentivize businesses to purchase new equipment, Hall told the Post. The higher the vehicle weight, the more likely it is to be a heavy duty pickup. These days, though, there are more vehicles than people think that sneak up to qualify. Now, for me, if I were to ever do this in the future, I'd probably get like a super, like, heavy duty modified massive pickup truck or something, like something crazy, right? Like, because I think that'd just be super fun. But more than likely, I would never do that just because it'd be hard to really justify the purchase of that vehicle at all, right? So the Hummer deduction isn't the only 100% legal workaround that wealthy Americans use to offset their upscale lifestyles against Uncle Sam's bottom line. According to Asher Rubenstein, a partner at New York City-based Gale, Dreyer and Berkey, and a seasoned pro in asset protection tax practice, take the Augusta rule. It's named a nod to the Georgia town where homeowners have long rented out their mansions during the PGA Spring Masters tournament there. In the 1970s, residents lobbied the feds to allow them to do that for a brief period every year without operating as a rental businesses or paying taxes on what they charged. Now, anyone who owns multiple estates can rent out their primary residence at market rate for up to 14 days a year and bank the profits tax free. So there's another loophole, the 1% equivalent of extreme couponing that can be stacked on top of that per Rubenstein. Rent your home out to your business for a corporate retreat or monthly board of directors meeting, and now the rental payment is deductible to the business and income tax free to you, he said. It's like a bonus on both ends. Another temporary bonus Rubenstein encourages everyone to recognize right this tax season. Business meals, which were traditionally 50% deductible, can now be fully counted off. A government gesture to try to juice pandemic hobbled restaurant checks. So this was a lifeline Congress threw the restaurant industry. He said the measure that expires at year's end, it means that even first growth Bordeaux and a four-course prix fix at Danielle qualifies, as long as the meeting and eating was business related. Got a closet full of Birkins or a couple of prized Picassos? There's a tax workaround for that too. You can establish your own family 501c3, then donate the luxury goods to that new foundation. The donation earns the tax deduction, and the foundation doesn't pay tax when it sells the goods. Rubenstein has set up client systems like this for everything from sculptures to stocks. Crypto rich types are now asking if it's applicable there too. Here's how such systems work. Say you bought Apple stock at $50 and it's risen to $150. Selling those shares the regular way will trigger capital gains tax on the $100 profit. But if you donate those shares to a charitable remainder trust, your own personal 501c3, the tax situation is much better after selling them. You can get distribution on annual basis as long as you can demonstrate that 10% of the amount will go to a qualified charity at the term of the trust, Rubenstein says. It works the same way for any appreciated asset, like a painting or a bag that ticks up in value each year. A family controlled 501c3 turns a luxury good into a do gooding gesture. Want to offset the cost of a high end family pet? There's a chance to do that if the dog is a security animal, per Rubenstein. And when you're spending six figures on a dog, that's a welcome abatement. So Green owns and runs Svalin, a Montana based dog breeding and training company that's like a canine Quantico. Well trained graduates cost $125,000 each and do double duty as adorable family pets and protection officers prime to detect danger before it happens. Imagine spending $125,000 for a dog, right? And a part of me is like a little bit sad to like read something like this, not because someone's spending that money on a dog, right? Go ahead and get a dog or whatever, right? The problem that I see, like, you could have adopted a dog from like a shelter. You could have like helped so many dogs in the shelter. Right? I mean, that's just like a personal viewpoint. Like everyone's free to do whatever they want, right? But it's kind of sad to see that people are willing to drop like 125 grand on like a custom built dog, like like the dog's not even really a dog anymore, instead of just adopting a pet, you know, that probably was abused or whatever, you know? That's just a personal viewpoint. So quite a few people purchase dogs as business expenses because it's just a justifiable security asset, Green told the Post, like the Florida jeweler who keeps a surveillance dog at her side in the store and as she walks to her car late at night. Doctors are common clients too, she says, keen to have protection from a surprise visit by a disgruntled former patient. Unlike a simple pet dog, your personal protection dog goes with you everywhere you go as your guardian angel, Green said. It's a reminder that there really are different rules or even a different game to be played when you're rich. Some people might argue you're depriving the government of revenue, so there's an ethical obligation, lawyer Rubenstein said, but high net worth individuals are taking advantage of legal loopholes. If you're having a business meeting with clients, why should the deduction be capped at a bottle of mediocre wine from Sonoma? Why can't we open first grows and deduct them instead? And look, a lot of people have different views on this. The reality of the situation, this is not a problem for these rich individuals taking advantage of something legal, right? Because all of this is legal. All of this is within the tax literature, right? So you can't really put blame on them for simply doing something that is quite literally legal and able for them to do, right? And this is my viewpoint on like taxes and all that kind of stuff, right? The simplest way to solve all of the tax problems is to keep the tax flat with no deductions, right? So you lower the taxes, but also have no deductions where they can't do things like this, right? So, for example, have a flat tax of like 10% for everyone, period, with no deductions. Problem solved in terms of like simplicity of the tax code, less paperwork, far more simple, easier on everyone because they know how much taxes they got to pay, right? It's like, oh, okay, 10% for all my income. Okay, simple, right? It's simple to figure out 10% out of $50,000 per year, or 10% out of $100,000 per year, or 10% out of $1 million per year. Like it keeps it very simple, and in fact, it probably actually increased the amount of purchasing done, the amount of commerce being done, because everything would just be so simple. That's my viewpoint on it. Anyone else could have very different opinions on it. My thing is, if you want people to stop doing deductions to avoid paying taxes, then just rewrite the whole tax code, keep it super simple, but with no loopholes. So everyone ends up benefiting from it in the long term. If you want to learn how to get out of debt and master your money, go to 40inbox.com.